Welcome to Accounting 101. Today we're going to look at Perpetual Inventory System tutorial number 1. So what you need to understand about this tutorial or this activity is that we are trying to analyze or trying to prepare financial statement using a perpetual inventory system, or also known as a continuous inventory system. So today we're going to look at Remic Traders, a pre-adjustment trial balance on 28 February 2015. So given here is the balance sheet and extracts, meaning that we are given the information that we are going to use whenever we are responding to these questions. So the required here is for you to be able to determine whether you are having a trading stock surplus or a trading stock deficit using a perpetual inventory systems. So for you to be able to determine whether this is a perpetual inventory system or periodic inventory system, the first clue that you need to know or that you need to identify is that you will always be given two balances for trading stock. And for you also to be able to identify that this is a perpetual inventory systems, you will need to, or rather the term trading stock itself will tell you that this is a this is a perpetual inventory systems. But if you were doing a periodic inventory systems, you're going to see a term purchases. So this is a periodic inventory systems because you are given what? A trading stock as an account. Trading stock as an account under assets for perpetual inventory systems, but for a periodic inventory systems, you will be given purchases under expenses. Okay, firstly, you are given an adjustment that states is that according to the physical stock count, the following stock was on hand on 28 February 2015. So above, you are given a closing stock. So above, we are giving a trading stock balance, a closing balance, and here you are given So above we are given a balance for trading stock which is 56,200, a closing balance on 28 February 2015. Then the adjustment is telling us that according to the stock count, when we went there to the warehouse and physically counted stock one by one, we identified or we arrived at a figure of 56,000 Rand of trading stock. So here the balance as per your trial balance is higher than the balance as per the adjustment. Now, the most reliable balance that we'll find here is the balance as per physical stock count, because from this balance as from the physical stock count, you are able to determine the actual balance minus theft stock that was stolen, minus stock that was damaged, or stock that was incorrectly recorded. So according to our solution now, you had a balance as per trial balance 56,200, and you have a balance as per adjustment which is 56,000 rand. So that gives us a difference of 200 rand. That difference of 200 rand, we call it a trading stock deficit. Why do we call it a trading stock deficit? Simply because according to our trial balance, we have an overstated amount of trading stock compared to what we have actually or what we have in reality. Therefore, that decrease of an asset, we call it a trading stock deficit, which is an expense account. So a decrease of an asset, we use what? An account of an expense to support that decrease adjustment. So in this case, we are going to call it a trading stock deficit, of which is an expense account. So when you are preparing your income statement, you will have your trading stock deficit under your expense or under your expenses. When you are preparing your income statement, as a set of on a financial statement, you will also include trading stock deficit, which is an expense account. You're going to record this account just below your expense accounts. So one of your expense account will be trading stock deficit, and you are recording that adjustment where you are saying we are decreasing your balance as per trial balance to your balance as per adjustment or balance as per the stock count. So that 200 rand, we are reducing an asset. We are not saying there is stock that is missing or whatever the case may be, but we are adjusting. It's more of an expense of adjusting an asset to the most accurate balance or to the most accurate balance or most accurate amount. Lastly, when we are preparing your statement of financial position, you are looking at what is called balance sheets in other terms. So you will be looking at your when you are preparing your statement of financial position, your current assets account uh, when you're preparing a statement of financial position, you will also need to record or disclose your trading stock account under current assets or under the subcategory of current assets. Your trading stock you will use the balance as per adjustment, which is the most reliable balance with regards to two balances, the balance as per trial balance and the balance as per your adjustment. So for the statement of financial position, you will only disclose 56,000 rands because it is the most reliable balance where you physically went and counted stock so that until you arrive at a figure or an amount of 56,000 rands.